Hello and welcome back to Sketch Capital. Imagine standing at the threshold of a massive industrial engine, one powered by global innovation. We are currently witnessing the monetization phase of the AI supercycle. What began as speculative infrastructure has turned into raw capital performance. As of May 2026, the QQQ has delivered a staggering year-to-date return of approximately 41%. This is a fundamental shift in market architecture. But beneath this growth lies a highly concentrated structure. 7 companies are driving the majority of this momentum, leading to critical questions of sustainability. In the next few minutes, we will reveal the structural reality of the QQQ, dissecting its holdings and the technical specs of its long-term performance. We'll bridge the gap between simple price action and strategic investment logic through a 3-part technical analysis. Part 1. The Performance Reveal. Let's look at the numbers that define the current state of innovation-led investing. The 1-year cumulative return for Invesco QQQ is plus 40.84%. This is an exceptional technical performance for a 12-month period, meaning $10,000 invested in Invesco QQQ 1 year ago would be worth $14,084 today. This reflects a period of high momentum. This performance is especially notable given the volatile start to the year, proving the resilience of the innovation sector's fundamental growth. The 3-year cumulative return for Invesco QQQ is plus 110.61%. This demonstrates the power of multi-year holding periods, meaning $10,000 invested in Invesco QQQ 3 years ago would be worth $21,061 today. Your capital has more than doubled. Over a 5-year horizon, the cumulative return stands at plus 103.80%, a reliable signal of structural upward pressure, meaning $10,000 invested in Invesco QQQ 5 years ago would be worth $20,380 today, an impressive preservation of purchasing power. Notice the pattern. As we extend our time frame, the impact of compounding interest becomes increasingly visible in our architecture. But the true reveal is the decade-long view. The 10-year cumulative return for Invesco QQQ is plus 578.64%, meaning $10,000 invested 10 years ago would be worth $67,864 today. This is the definition of exponential scale. These figures aren't just numbers on a screen, they represent the successful execution of 100-year-old companies redefined for a digital age. Part 2. The Components. Let's look inside the engine at the specific companies driving this extraordinary performance. NVIDIA currently leads the portfolio, representing over 8% of the fund. It is the core hardware layer for the AI revolution. Apple remains a fundamental pillar at 7%, providing the stable consumer ecosystem that balances the portfolio's higher beta components. Alphabet contributes a combined 7.5%, securing the fund's dominance in communications and search infrastructure. Microsoft at 5% provides the software and cloud backbone, increasingly integrated with generative AI modules. Amazon rounds out the top 5 with 5%, representing the fund's exposure to the digital consumer discretionary sector. Observe this technical detail. The top 10 holdings dictate approximately 50% of the QQQ's price action. This is extreme concentration. This means that fewer than a dozen companies define the fund's success. While this drives gains, it also creates a single point of failure risk. The fund's sector allocation is heavily skewed toward innovation, with technology and communication services taking up over 70% of the weight. Interestingly, the QQQ also includes pillars of traditional innovation, like Walmart and Costco, which provide a defensive consumer staple layer. The Federal Reserve's pivot toward rate cuts in 2026 has been a significant tailwind, increasing the net present value of these growth companies. We have moved beyond the infrastructure phase. Investors are now scrutinizing how these giants convert AI chips into tangible revenue growth. Geopolitical shifts, including cooling international tensions, have also provided the market with the stability needed to maintain this mature bull run. A major technical shift occurred recently. Invesco QQQ converted from a unit investment trust to a more flexible open-end fund structure. Coinciding with this change, the annual expense ratio was reduced to 0.18%, further enhancing the fund's efficiency for investors. Understanding these institutional and macro details is what separates a professional investor from a casual speculator. If you are finding these technical revelations valuable, please like and subscribe to join the Sketch Capital Strategy team. Now, let's look forward. What do the analysts and the data tell us about the remainder of 2026? Some conservative forecasts project modest gains, citing liquidity risks and high capital expenditures that may limit future share buybacks. More aggressive analysts see a potential 14 to 17% upside, banking on continued AI-driven earnings, surprises, and stable inflation. Prediction markets show an 87% probability of maintaining current levels, though breaking the 30,000 milestone remains a challenge. Remember, high beta innovation investing comes with inherent turbulence. The path to 500% returns is never a straight line. So, what are the lessons we can extract from this deep module of the QQQ's architecture? Lesson 1. The QQQ is a bet on global innovation. You are investing in companies that are redefining human productivity through technology. These companies don't just exist in a vacuum. Their technology reaches into every other sector of the economy, driving global efficiency. Lesson 2. Patience is your primary technical spec. The 500% return was only available to those who held through every downturn. Volatility is the price you pay for growth. If you react to every daily fluctuation, you disrupt the compounding module before it can complete its cycle. Lesson 3. Understand the mechanics. The QQQ rebalances to ensure that no single company can permanently overdominate the index. While the QQQ is a powerful growth engine, professional architects always balance it with other sectors to manage total portfolio risk. Lesson 4. Knowledge is your most valuable capital. The more you understand the architecture of your investment, the better decisions you will make. We have revealed the QTD and historical specs. The evidence for innovation-led growth is undeniable, provided you have the strategy to manage it. From NVIDIA's AI core to Walmart's retail foundation, these components are the pillars of the modern global economy. Our mission at Sketch Capital is to provide you with these blueprints, ensuring you navigate the markets with technical precision and calm confidence. Join our growing community of strategic thinkers. By educating yourself today, you are designing the wealth of your future. Investing is a journey of 1,000 miles, and each reveal brings you one step closer to your destination of financial freedom. Remember these numbers: 40% in 1 year and over 100% in 3. The potential is immense for the disciplined. And over 5 and 10 years, that potential becomes realized wealth. This is the structural power of the Invesco QQQ. We have completed our dissection of the QQQ architecture. We hope these insights serve as a solid foundation for your next investment move. If you found this reveal helpful, please like the video. Your engagement helps us reach more future strategic investors like you. Building wealth is an art of patience and precision. We are honored to be your guides on this technical path to prosperity. Thank you for your time. I hope this was valuable for you, and see you in the next video. Strategic insights for a new era of innovation dedicated to your long-term financial architecture. Thank you for watching. Your future is being designed today. We will see you in the next analysis.